Welcome to the deep dive. Today, we're taking a closer look at the Indian IT sector. You might have noticed, maybe heard, that it hasn't quite kept pace with the broader market recently.
That's right. The Nifty 50, Nifty 500, they've sort of pulled ahead a bit.
Exactly. So we wanted to really dig in, unpack what's behind that underperformance.
Yeah. Figure out the reasons, look at what might be on the horizon.
And maybe think about whether now's an interesting time to look at these companies, from the giants down to the more niche players.
Absolutely. I mean, for ages, Indian IT was this cornerstone of economic growth. So any dip, any slowdown, it's definitely worth understanding.
We've gathered some insights, some recent reports to try and piece it all together for you.
Yeah, the goal is really to get to the heart of it, map out the current landscape, and maybe see what clues the future holds.
Okay, let's jump right in then. Why the recent slump? It feels like just yesterday IT was, flying high.
Well, it seems like a confluence of things, really. For instance, back around April, there were reports surfacing, I think it was Wipro, forecasting a revenue decline for the next quarter.
A decline. Wow.
Part of the reason cited was concern around tariffs.
Right.
Those taxes on international trade. And it wasn't just Wipro. Around that same time, the U.S. Fed Chair, Jerome Powell, he actually warned about tariffs potentially hurting growth and pushing up prices.
Right. So that kind of adds to the general nervousness, I guess.
Exactly. It weighs on sentiment, especially for a globally connected sector like IT.
How do tariffs specifically hit IT, though? Is it about hardware costs or?
It's broader than just hardware. Think about global projects, client budgets. If tariffs create economic uncertainty, clients might pause spending. Plus, it can complicate operations, maybe increase costs for companies working across borders.
Okay, that makes sense. So global trade jitters. What else?
Well, there are also these wider economic signals. Fitch, the ratings agency, actually revised India's GDP growth forecast downwards a bit for this fiscal year and the next.
Okay. So less optimistic growth overall.
Yeah, and when the general economic outlook dims slightly, sectors like IT, which are often linked to business spending and confidence, they tend to feel it too.
Right. So a mix of specific company news, tariff worries, and broader economic caution.
Got it.
Yeah.
So looking beyond those sort of immediate pressures, what are the bigger, maybe more persistent headwinds the industry is facing?
A really significant one is the skills gap, especially in emerging tech. We're talking AI, machine learning, data analytics, cloud.
The hot areas, basically.
Precisely. Indian IT companies, they really need to double down on upskilling their workforce to capture the growth in these areas. It's critical.
Yeah, staying ahead of the curve there sounds crucial. What else is on the radar?
Competition. It's definitely heating up globally. Countries like the Philippines, China, even places like Costa Rica, they're becoming stronger contenders in the IT outsourcing market.
So more players vying for the same pie.
Pretty much. And then there's cybersecurity. The threats are just getting more sophisticated, more frequent, which means more spending needed to defend against them.
A lot more. We're talking projected spending in India crossing $3.5 billion this year just on cybersecurity. It's a major cost center now.
Wow. And I imagine keeping good people is always tough.
Always.
Yeah.
Talent retention is a perennial challenge. Companies constantly need better strategies to, engage and keep their employees happy.
And regulations, data privacy and all that.
Oh, absolutely. Navigating the maze of global data protection laws, GDPR, and others, it's complex, it's costly, and it requires constant attention.
Okay, that's quite a list. Skills, competition, security, talent, regulations, anything specific industry-wise. You mentioned something about cars earlier.
Yes, that's a key point, particularly for the ER&D segment, engineering, research, and development.
Right.
The slowdown we've seen in the European auto sector, that's directly hitting ER&D companies that rely heavily on automotive clients.
Yeah.
If car makers cut back R&D budgets or delay projects,
it flows straight through to those IT firms doing the engineering work.
Exactly. It impacts their growth significantly.
Yeah. Okay. That gives a much clearer picture of the challenges. Let's shift gears slightly to maybe the biggest topic buzzing around tech, AI, artificial intelligence. It feels like it could be both, a threat and a huge opportunity.
You've hit the nail on the head. AI is absolutely a double-edged sword for the sector right now. On the one hand, it's driving massive innovation and creating new demand. Something like 75% of Indian enterprises are expected to integrate AI into their processes this year.
75%, that's huge.
It is. And that means opportunities for IT service companies to help with that integration, to build AI-powered solutions, to expand their AI-led delivery, enterprise AI, generative AI. These are becoming defining themes.
So definitely new business streams opening up. But what's the flip side? The threat part.
The concern is automation. AI has the potential to automate a lot of the tasks that IT service providers have traditionally done, the more routine stuff.
So it could potentially replace some existing revenue streams.
In the long run, yes, potentially. If companies don't adapt quickly, if they don't move up the value chain towards more complex AI strategy and implementation, that automation could sort of cap their growth. It's a major transformation they need to navigate.
Adaptation seems to be the key word then. Okay, let's get more specific. How are some of the big companies actually faring? What did the recent Q4 results tell us?
Well, looking at the large cap players, your TCS, Infosys, Wipro, the growth outlook is generally, let's say, moderate. Steady, but moderate.
Which is kind of expected given their size, right?
True. We're looking at estimates like maybe 8–9% earnings per share growth for TCS, around 7% revenue growth for Infosys, maybe 5% EPS growth for Wipro. Decent, but not explosive.
And Wipro, you mentioned their forecast earlier. Did their Q4 reflect that?
Yeah, Wipro actually missed their Q4 revenue estimates. And then, as we said, they forecast that decline for the April-June quarter. So some headwinds there specifically.
Okay, so the giants are managing, but maybe not setting the world on fire right now. What about the next tier down, the mid-caps? They often grow faster, don't they?
That's where you often see more dynamism, absolutely. Companies like Persistent Systems, for example, have shown really strong growth over the past few years. They doubled revenue between FY22 and FY24, I think.
Doubled. Wow. How?
Partly through focus. Persistent has a strong focus on verticals like healthcare, which have been growing well. Coforge is another one. Consistent double-digit revenue growth for years. And they keep adding a good number of new clients each quarter.
So specialization and consistent client wins, driving growth there. Makes sense. What about those ER&D focused companies we touched on?
Right, the ER&D space. You've got Tata Elxsi focusing on transportation, healthcare, media. An interesting dynamic there is that their margins can be quite cyclical. They need to maintain a large bench of skilled engineers ready for projects. If sales growth slows down, like it has moderated recently, but they still have those engineers on payroll, it can squeeze their profit margins. We saw Tata Elxsi's EBIT margin dip, for instance. Now they're focusing more on cost optimization.
And the auto slowdown impact.
Yeah, that's hitting others hard. Companies like KPIT Technologies, Tata Technologies, both have a really significant focus on the auto sector. The European slowdown is a direct challenge for them right now.
Okay. And finally, what about companies selling their own software products, not just services?
Product companies. That's another different story. Take RateGain, for example. They saw a strong margin expansion earlier, but now they're in a phase where they really need to reinvest heavily in the product itself, in sales and marketing to sustain growth.
So that reinvestment can pressure margins, even if sales are growing.
Exactly. It can delay reaching that sort of consistent high profitability. Intellect Design Arena is similar. In some ways, their growth can be quite lumpy, depending on big deals, and they're constantly investing in new products, like for e-commerce or AI. So even if one part of their business is doing really well, the overall profit picture doesn't always show that sustained liftoff because of the ongoing investment.
Okay, so it's really a varied picture depending on the type of IT business, their focus, their size. Which brings us to the million-dollar question, or maybe the billion-dollar one for this sector. Is now actually a good time to consider investing in Indian IT?
Yeah, the big question.
Yeah.
And it's definitely not a simple yes or no. It's quite nuanced.
Let's break it down. What about the large caps?
Okay, the big guys like TCS,
Yeah.
Infosys, you could see them as relatively defensive plays. They often have consistent dividends. They do share buybacks.
So potentially stable, if not spectacular returns, maybe around 10–11% if you combine, say, 8% earnings growth with dividends and buybacks.
Potentially, yeah, in that kind of scenario. But you're probably not looking at massive earnings growth acceleration from them right now. And importantly, their valuations, their PE multiples, are still pretty high for some of them compared to pre-COVID levels.
So maybe not cheap, even with moderate growth?
Arguably, yes. Now, the mid-caps,
Nice pasture growers.
potentially, yes. Companies like Persistent, Coforge, they offer that higher growth potential.
But their valuations are even higher.
Generally, yes, often significantly higher. The market has already priced in a lot of that expected future growth. So finding value there is tough. You're paying a premium for that growth.
Okay. And the ER&D sector.
ER&D.
Yeah.
Long-term potential from outsourcing trends, definitely. But you have that cyclicality we talked about. And the current auto industry headwinds are a real dampener. Their valuations are also often above pre-COVID averages, despite the current challenges.
And the product companies. Rate gain, intellect design arena.
Huge long-term potential if they execute well and capture their markets. But predicting profitability is hard because of that constant need for reinvestment and sometimes lumpy sales cycles. It's maybe a higher risk, higher potential reward situation.
So, no easy answers. Are there any broader indicators giving us clues, like industry surveys?
Yeah, it's worth noting NASSCOM's recent CXO survey for this calendar year actually indicated stronger growth momentum ahead. Tech spending is expected to be higher, especially, guess what, AI-led digital spends.
Ah, AI again. But what about hiring? Are companies putting their money where their mouth is?
Interestingly, while spending expectations are up, the hiring growth expectations in that survey were actually quite modest. Tech providers do anticipate higher business growth next fiscal year, driven by digital emerging markets, AI demand, but hiring might still be tempered.
Okay. Growth in business, but maybe cautious hiring. One positive for investors, though, is dividends, right? Many IT companies are known for that.
Absolutely. Consistent dividend payouts from many of the top IT firms, plus their historical resilience during economic uncertainty, are definitely factors that attract long-term investors.
Okay, so a very balanced, maybe slightly cautious view on investing right now, which leads to the next question. With all these headwinds, is the worst actually over for the sector? Have we hit the bottom?
Oh, that's the crystal ball question, isn't it? It's really hard to say definitively.
Give it your best shot.
Well, look, the near-term challenges we discussed, the tariff concerns, those GDP forecast revisions, the auto slowdown, they could certainly continue to exert pressure for a bit longer. I wouldn't rule that out.
But any green shoots, any signs of improvement?
There are some potentially encouraging signals. We are hearing reports that major IT companies are planning significant fresh graduate hiring this year. The top four alone might recruit over 80,000, maybe over 150,000 overall for the sector.
That sounds positive. Hiring tends to lead activity, right?
It can be a leading indicator, yes. Also, looking back at 2024, global tech spending did show signs of stabilizing, with decent growth driven by hardware and software.
And what are the industry bodies saying about this year?
NASSCOM, for instance, expects resilient growth for the overall Indian tech industry in FY25, projecting revenues to reach about $283 billion, which is around 5% year-on-year growth. And exports are expected to cross the $200 billion mark. And that's not slowing down, is it? AI, cloud, 5G, whatever comes next. These will continue to be massive drivers.
So the demand for IT services fundamentally should keep growing.
Yes. Projections show IT exports continuing to rise, reaching perhaps $210 billion in FY25. Overall, IT spending within India is also forecast to grow significantly, maybe by over 11% this year alone.
And jobs.
Job opportunities across the sector are expected to see healthy growth, maybe 15–20% over the medium term. There's also potential upside if India manages to secure favorable bilateral trade agreements with key partners. That could boost global competitiveness.
So who wins in this future landscape?
I think the companies best positioned will be those that are really proactive about upskilling their workforce, that truly embrace AI and automation, not just as buzzwords, but integrate them deeply, and crucially, that maintain very strong cybersecurity postures.
So adaptation and execution again?
Absolutely. The Indian IT sector is clearly in a major transformation phase. Its future success really hinges on its ability to adapt to these powerful emerging technologies, effectively tackle the challenges we've discussed today, and maintain that sharp global competitive edge it's built over decades.
Okay, so wrapping things up. It seems the Indian IT sector hit a bit of a rough patch recently. A mix of global economic jitters, specific industry issues like the auto slowdown, and the big looming presence of AI creating both excitement and, well, uncertainty.
Yeah, and we saw it's not one size fits all. Large caps offering stability but maybe moderate growth, mid caps with higher growth potential but often carrying high valuations.
ER&D facing specific headwinds and product companies navigating reinvestment cycles. So the investment question is really about digging into the specifics of each business, isn't it?
Precisely. Understanding their niche, their strategy for dealing with AI, their execution track record.
Right. So while the immediate outlook has its clouds, the fundamental drivers for digital transformation, for technology adoption, they seem as strong as ever. It feels like the next few years will be really telling. They'll likely separate the companies that can truly adapt and capitalize on these massive shifts from those that maybe struggle to keep up. Leaves you thinking, doesn't it? Which companies do you think will emerge stronger on the other side? Thanks for diving deep with us today on the Indian IT sector.